All right, guys. In this video, I'll be talking about market structure. Because one of the problems we have is when you cannot identify the market structure, then your level of profitability will decrease. Just imagine you buying when the trend is bearish and vice versa. So it's not a very good thing. So I'm going to break down what we mean by market structure, basic, and move to advanced market structure. If you can understand this, then you do. I also move to the short and give you live examples. You break down 5 markets, okay, and see the direction of the markets. I hear what I'm saying. So let's move to something else now. Let me share my screen with you. Okay, let me share my screen with you. It's a very, very simple thing. All right. Okay. Let me remove this. It's okay. All right. Now, I hope you are seeing the screen. Okay, let me bring this down here. Please pay attention because if you don't pay attention, you look for it, you'll be in tension while you are trading. If you don't pay attention to what we are saying now, you should be under tension while you are what? Trading, okay? I'm coming. Let me bring this down. Okay. All right. Now let's move to the chart and see some things on the chart. All right. Let's go. Just be patient with me. Be patient. Patient is the key in the forex market. If you're not patient, you will not make money in the forex market. As simple as that. You don't need to overcomplicate things, okay? All right, now let's I think I should go in there. So I don't know if I should go in there. All right. Okay. All right. We are here. So before I go to the chart, let me show you what I mean by market structure. Now, the basic form of market structure that we have is price making lower highs and lower lows in a downtrend, then in an uptrend, higher highs and what higher lows. So you have price putting up this way. This is a typical example of what an uptrend, right? And at every point in this market, we know that we are breaking highs or break of what structure, right? So this is a break of structure. This is a break of structure. So at every point, when you stop seeing this, then the probability that the trend has changed is high, okay? Probability is high. So technically, this is an uptrend, okay? These are basic uptrends. Don't be deceived by this, okay? Also, in a downtrend, we have price making lower highs and what? Lower lows. It's as simple as that. So this is an example of a downtrend, price pushing down, breaking lows, okay? All right, so let me clone this technically. So this is cloning, all right? So clone means to make it ×2 or times 2 actually, okay? So at every point, we are breaking structure to the downside. So this is a bullish market. This market is what? A bullish market. A bullish market, okay? A bullish market, and then this market is what? A bearish market, right? Bearish market. All right. So it's a bullish market. This was a bearish market. Take note of that. This actually basic. All these I call them basic market structure. They're not what will make you profitable, but just a framework. Basic market what structure is what most people know. But unfortunately, if you know only this, your profitability in the market will be slim. Yes, it will be slim. All right, now this is for the two. We also have a market that is consolidating, but I don't have time for that. Now let's look at advanced market structure. Now, before we actually move to that, that's what we call time frame analysis. Let me stay around this premise. That's what we call time frame analysis. Let me break it down. Now, time frame analysis. Those of you that will stay until the end of this video, you do well, okay? Now, it will depend on the type of trader that you are, okay? It will depend. It will depend on the type of trader that you are. So your time frame will depend on your ability as a trader, okay? Your time frame will depend on how patient you are, okay? It will depend on how patient you are. I hope you are seeing what I'm doing. And those of you that are in a hurry to go, I don't know where you want to go to. I don't know where you want to go to. So I'll just make this video as fast as possible. I would have made it a longer video because it's not time to be lazy, okay? All right, let me do it this way. Okay. Now we have different types of traders. Okay, we have two types. We have big banks. These are institutional traders like big banks, hedge fund. We have retail traders. The retail traders are actually divided into the following. We have scalpers, okay? So I get that. We have scalpers, okay? We have what? Scalpers. We have what? Day traders. We have scalpers. We have what? Day what? Day traders. I think I removed that scalping. Let me write it down. We have scalpers. We have day traders. We have swing traders. We need to know their time frames, but their time frame matters. We have swing traders, which is this, which is this one. This is for day traders, scalpers, swing traders. And we also have positional traders. I believe that is all. Which traders. Okay. Positional traders, scalpers, day traders. So we don't have this. So we only have 4 types of traders. Now, the type of trader that you are will determine the time frame you are going to analyze and the time frame you are going to enter in your trade. Am I talking here? All right. Now for scalpers, these are people that can stay in the market for 15 minutes and they're out. They can just take a trade for 15 minutes, 10 minutes, and they're out of the market. They are very quick. They are very quick to, execute a trade. So the time frame that they are going to do their analysis will be from, most of the time they do it from the 15 minutes. They analyze from the 15 minutes, okay? And then their entry time frame, technically, their entry, they'll do it on the 5 minutes, okay? We'll do it on the what? 5 minutes. I'm sorry for that. Something else. All right. We'll do it on the what? On the 5 minutes, right? Okay. We are here. So I'm coming. Let me remove this. So the entry will be I put my batteries my laptop battery allows that to enter on the 5 minutes. So if you're a scalper and you're going to do analysis on the 5 hour time frame, that is confusion. it is confusion. For day traders, their highest time frame that they do the analysis on. Okay. This is analysis where they look at the bias and then trade alongside analysis and the entry time frame. For day traders, they do the analysis. Okay. They do the analysis on the 4-hour time frame. So the analysis will be on the 4-ish time frame. Okay. And then their entry. And then their entry will be do their entry sometime on the 15 minutes or sometimes on the 5 minutes. So you can see how the time frame aligns. So they enter on the 15 minutes, analyze on the 4-hour. Swing traders, they do the analysis. They do the analysis on the weekly, the daily, the weekly, the analysis on the weekly. So they do the analysis on the weekly time frame. Weekly, okay, daily, okay, and then they enter, their entry time frame is basically the 4-hour time for swing traders, sometimes 1-hour time frame. For positional traders, sometimes the analysis is done on the monthly time frame, on the monthly, on the daily, the monthly, weekly, daily, okay, daily time frame. And then they enter, sometimes most of them enter on the weekly, but like me, I like entering on the weekly. Or they can move to the 4-hour, okay, and leave their trade there. All right, now let's see what they do. Scalpers, remember we said they analyze on the 15 minutes, enter on the 5 minutes. So they are very quick. They are 15 minutes, they are done. Day traders, they do analysis on the 4-hour time frame, enter on the 15 minutes or 5 minutes. These people, they close their trade in a day. Even scalpers, so they close in a day. So the similarity between scalpers and day traders that they close their trade that same day. But day traders hold it a longer, can be 4 hours, 5 hours. But scalpers, they don't reach hours. 30 minutes, they are done. Swing traders, they analyze the market on the weekly, daily, and they enter on the 4-hour. Now, swing traders, they can hold their trade for a long time. 1 week, 2 weeks, 3 weeks, but not a month. Not a month. Okay? And then on the 4-hour. Positional traders are people like Elon Musk, Jeff Bezos that trade crypto. Those who are positional traders, they can hold their trade for a month, a year, 2 years. Understand? Based on their technical capacity and all that. So they analyze the monthly, weekly, daily, and then on the weekly, or sometimes even on the 4-hour time frame, as the case may be. So it will depend on the type of trader that you are and your patience. Remember that the higher the time frame, the higher the patience. I repeat, the higher the time frame, the higher the what? The patience. Higher what I'm saying. Good. All right. So if that be the case, let's now move to what we have. Let me relate all this. All right. Now we are talking about market structure. Remember that's what we're talking about. Market structure, right? Now, I've shown you the basic type of structure, lower highs and lower lows, higher and higher lows in a bullish and bearish trend. These are basic structures. Now, we have advanced market structure. We have what? Advanced market structure. If you can understand this, I promise you, the market will obey instructions. What you need to do just to have a proper risk management. I promise you, your profitability will increase astronomically. Your trading percentage profitability will increase astronomically if you can understand advanced market structure. All right. Now, let me keep it here. All right. Now, we know that before ever, all right, let's take this as, let's take this line, okay? Let me let me do something. Just hold on, okay? To teach is not easy. Okay, boom. Let's take this black line as our 4 hour, okay? As our 4 hour. So let me, black line, sort 4 hour, right? All right, now this is our 4 hour trend. Is bullish, right? All right, so let's see what happens. Those of you that wait and wait until, all right. Let, let me make this line red, okay? Good. Now, there's something I want to show you. Let this red line, okay? I wrote that. Let that red line be our, or 15 minutes. I don't want to go far, okay? For day traders. Now, what am I trying to do here? That's what we call swing structures, swing points, or structure. Let me put as points, okay? I put my battery last. Now, swing points are actually the highs or the lows that breaks a particular structure to the downside or to the upside. Write it down. Swing points or swing structures are the highs or lows that price has made that led to a break of structure. Okay, all right, now let's take a look at this now. Let's take a look at this chart. If you look very well, let me increase this. This is a break of what? Of what? Of structure, right? That is a break of structure, right? Okay. That break of structure means what? The trend is what? Bullish, right? No doubt. And we can see that price. Let me make this. Let me do something so that I will not be. You can see that price came here. Price pushed up, retraced, right? And then broke what? Broke the structure here, right? And then price pushed. On the 4 hour time frame, price retraced. Now, before price retraced, price created this high here. Okay, this high was created before price started dropping, right? And then price push. Did price go above this line here? No, isn't it? Now, that is a sign that the bulls are getting weaker, because at every point we should be breaking structure to the upside, which connotes a bullish trend. So what happened? They failed to do that, and then they crashed. These, those of you that are following me, let me cancel this. Okay. Let me take um let me, okay, that's what I'm looking for. All right. Okay. Just hold on. All right. All right. I'll draw it back. I will draw it back, okay? Just wait for me, okay? All right, now, so we said that we had this price pushing, failing, crashing below, pushing down, right? Okay, pushing down, and then finally push upside. How we said now, before ever price will show you a sign that it is failing to take out this eye here. That eye that I drew, price failed to take it out, right? And then price pushed all the way from here. Price pushed all the way from here, right? Price pushed here, okay? And then what? Dropped. So this point here, this is your recent higher low and then a lower high. So here is what we call, that place is what we call a shift in market structure. Before ever price will fail to move up higher, it will give you a shift in market structure. Those of it, I don't know what it is. Go to YouTube and type shift in market structure and you see a lot of explanation there. I don't want to go into that. And what happened? You see price pull back and then started falling, right? Okay. You saw price. After price did that, you see price falling, pushing. Now, this, remember that this is the 15-minute time frame. So if you're a day trader, once you saw that price has broken structure and push, after a break of structure, what do you expect? A pullback, isn't it? That's what we did here. Okay, I've repeated it. Whenever price breaks structure to the upside, what do you expect? A pullback. Now that pullback, you will see it. You may not see it easily on the 4-hour time frame. So you see it on the 15 minutes. You'll be scared of the 15 minutes. For price to tell you that it want to go bearish, it want to retrace, you will see a shift in market structure, which we have seen here. Here. So this shift is telling you that price, we are not bearish, we are bullish. But this is a bearish trend and an overall bullish trend. So price is now coming down. Now for price to tell you that it wants to move up again, it wants to go in line with the overall trend, it will have a shift in market structure. And this is where we have it here. This guy. That is a shift in market structure, which is telling you that price wants to move up in line with the trend. Now, this eye here, okay, this eye, the price failed to take out before retracing, is called a swing point, or call it swing highs. Swing high because it is high now, right? If price takes out a swing high, we are bullish. But if after this guy push from this side and fail to take out this swing guy and start coming down, we are bearish because it's failed to do a job. All right. So then the lowest point that price made before pushing upwards is this point, right? Right. This is right. So that means this point now is your swing low. Am I talking here? That is your swing low. So assuming as price was coming down here, for instance now, as price was coming down here, and then price mistakenly closed with the candle below this, we are bearish. But price failed, right? And started pushing up, took out this swing guy, so we are bullish. So this is another market structure. Now, all these things you see within all these structures you see here, within the swing eyes, they are in between the swing guide, right? They are called internal structures. Write it down. Write it down. They are called what? Internal structures. So before the trend we pull back, after you have a break of structure, the internal structure we have to flip bearish. And how do you know that it's not to flip bearish? You see a shift in market structure, which is here. Price will pull back. Before it will tell you that it wants to continue moving up, it will give a shift in market structure again. And this is a function of the internal structures, not the function of the swing guide or swing lows. All right. Now, what you need to do is to identify the highest point that led to the break of structure. Okay, this was the point that led to that break. So this is my, not this. This is my swing, this is my swing guide. So this is a bearish, I mean a bullish market. Okay, let's move to the chart and let me show you from the chart before I call it a day. Can do it anywhere, any chart. I repeat, any chart, we can do it. I don't need to talk too much. Now, before you do this, you have to zoom out like this. Yes, keep it this way, because if you don't keep it this way, you'll be confused whether we are bullish or bearish, and you may lose a lot of money. Okay. What do we see here? What do we see here? As price was coming, see, you don't even need to go too far. Let me just use this current price action from here to this side and tell you the bias of the trend, okay? I don't need to go far, all right? All right, now this is the 4-hour time frame. Now, what do we see here? You can see that we have a break of what? Of structure here, right? This is a break of, let me think, I think I have to change this. Let me change that line to my favorite. All right. So we have this break of what? Break of what? Structure, right? Okay. Which low led to that break of structure? Which low? This low, right? It was this low, yeah, that made us to break that structure, right? Right? So that means this low here is your swing low. Hey, that low is your swing low. That price should not take out. If price takes it out, you are not bearish. I hope you see that price pushed up again and what? Retraced, right? Before pushing up again, right? This is also a break of structure. All right, so now we are not operating between this. We have another break of structure here. Boom. Okay, this is another break of structure. Which low led to that break is this guy, right? So this guy has now become your new swing low, not this guy again. Should price come and close below it, you are what? You are what? Bearish. Don't worry. We'll get to that. Now, what is again? Price broke up from this low and pushed up, right? All right. Price pushed up. Let me adjust this. Pay attention. As price push up, we have a break here again, right? It's another break of structure. Which low led to that break of structure? Which low? This low? Is it this low or this low? This low led. This low led to that break of what? Structure. So that low, this low here, is your swing low. Is your what? Now, how do I see what's happening there? Remember, I told you that if price closes below this thing with the wick of the candle, you are not bearish. I hope you see that price really came and swept liquidity and pushed up again, telling you that this is a strong swing low that price should not take out. Price should not try it. Okay, let's go ahead. Now, what happened? You saw price retraced and pushed up again. Okay. Now, basically, if we see break of structure, now you can see that price pushed up now. Price came down or failed to close below this swing low. So from here now, you can see that price took out this guy, right? Like you're seeing it. So because price has closed with the body of the candle year and year, we are now bearish. We are now what? Bearish. Why? After price from here pushed, price formed a high here, isn't it? A swing high. Okay. This is a swing high. The price should take out if the bullish trend should continue, right? I pray my laptop battery don't disappoint me, okay? But what happened? After price pushed up, what do you expect? After a push and a retracement, what do you expect? For price to go ahead, right? But did price close above this guy? No, price only stopped here, failed to do a job and started falling down. So we became bearish because of this. So all through this movement, price is failing to close above that guy. And then consequently, if you look very well, from here, price is now breaking loose. From here, we have this break. This is a break of structure, right? It's a break of structure. Which eye led to that break? Look at it very well. Which eye? This eye, right? This guy. Let me cancel this. It was this guy. This high, okay, is your swing guy. This eye is your swing guy that made this break of structure. After a break, what do you expect? A push, right? Now, remember I told you that before price, after price breaks structure to the downside, you expect a pullback. Before that pullback will take place, what do you expect? A shift in structure, right? All right, so this is your lower low, lower low. What do you see? Price had a shift in market structure because this is your recent lower high here. And price what? Pulled back and pushed to the upside. And then started falling. Before price will fall back again, what do you expect? A shift again in market what? In market structure, which is there. Yeah. Price pull back again and then fell. So it happens every time. But now we are looking at structure. Okay. Okay, so then we pulled back and then pushed down again. We had another break again here. There's a break here too. Which eye led to it? This new eye. So this is no longer our swing eye again. This is now our swing eye. The price should not take out. The price takes it out. We are now bullish. And then we see the price retraced, right? Pulled back. Okay.